Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a quick look at Trinidad and Tobago Stock Exchange. Of course, we're talking about the Ansa McAL Group, as well as one of its significantly owned subsidiaries, Ansa McAL Limited. Now, both groups would have reported some fairly resilient results in the current environment. Let's take a look at what that would have been and what investors might expect in the coming months ahead. Turning firstly to Ansa McAL, and for the fiscal year ended December 2025, the group reported an earnings per share figure of $3.28, which was a marginal 1.2% decline from the $3.32 recorded in that prior comparable period of fiscal 2024. Now, importantly, earnings per share from continuing operations would have actually improved 3% from the $3.34 reported in that prior comparable period to $3.44 in the most recently concluded fiscal period. Now, revenues were one of the primary drivers for that improved continuing operations performance, up 9.4% from $7.1 to $7.78 billion. Ultimately, operating profits improved 23% from $961 to just about $1.18 billion. However, there was a fairly significant increase, a 181% increase, in fact, in finance costs from $67.9 to $191 million, which led ultimately to profit before tax from continuing operations improving just about 9.9% from $922 to just over the $1 billion mark, with profit attributable to equity holders ultimately decreasing that 1.1% to $565 million from that $571 million dollars. Now, when we take a look at the operating segments and their respective performances, somewhat of a mixed bag, but generally consistent improvement in Ansa McAL's largest operating segment, for example, construction, manufacturing, packaging, and brewing, in that bluish color. We can see that there was growth from $612 million in that profit before tax to $657 million, a roughly 7.3 to 7.4% increase. Banking and insurance also increased fairly significantly, up around 30.5% from $213 to $295 million in that lilac segment. There was, however, a roughly 10% decline in PBT contribution from the auto trading and distribution segment, from $190 million to just about $170 million over the comparable periods, and a continued loss in the operating segment of media services, retail, and parent company, with that loss actually widening from $91 million to $108 million over those comparable periods. Now, importantly for Ansa McAL, their operating profit margin continues to improve quite considerably, growing from a low of 7.5% in that fiscal period of 2022, consistently improving to the current level of 15.2%. So continued improvement there, as we can see, which is going to redound to shareholders' benefit over the coming quarters and subsequent periods, with profit before tax margin also improving consistently, stabilizing right now at around just about 13%. The important news, of course, for Ansa McAL shareholders would have been that suspension of dividend payments over the 3-year period from fiscal 25 to fiscal 27. Prior to this, Ansa McAL would have been one of the most consistent and predictable dividend stocks on the Trinidad and Tobago Stock Exchange, and that may have contributed to its roughly 50% decline since that announcement, as well as a general lackluster investor environment over the Trinidad and Tobago Stock Exchange. So at a price of $39.50, Ansa McAL is trading at a price-to-earnings ratio of about 12 times, which is broadly in line with the sector average of 11 times. And again, with the suspension of dividends, it does not offer a dividend at this particular point in time compared to the sector average of 4%. So with revenue growth in mind, that continued acquisition activity and geographical diversification, but however, we down a bit over the medium term with that suspension of dividend payments versus maintaining its market leader watch on Ansa McAL with a watch outlook for the time being. Turning very quickly to Ansa McAL Limited, well, for its fiscal period of 2025, the group would have reported an earnings per share figure of $2.83 per share, which was a roughly 49% increase from the $1.90 per share recorded in that prior comparable period. Now, driving this performance was an overall 17.1% increase in that net insurance service result from $92 to $107 million. Net operating income actually improving a whopping 30% from $515 to $674 million. Overall profit attributable to equity holders improved 49% from $162 million to just about $242 million. Again, in terms of segment performance for Ansa Merchant, well, it was green lights across the board in terms of growth across segments. Its banking services segment in that orangish color, for example, grew over comparable periods from 81 to 126 million, or roughly 55% increase. Mutual funds, its smallest segment, still delivered a 260% increase, growing in terms of PBT contribution from 5 million to 18 million, and life and general insurance operations growing actually around 45 to 46% in that pinkish segment from 142 to just about $208 million over the comparable periods. Of course, when we take a look at its earnings per share trajectory over the past few fiscal years, you can see that it has been consistently improving since that fiscal 2022 period, from $1.51 in fiscal 2023 to $2.83 in the most recently concluded fiscal period. And with that decline or diminution in share price over the past few years, we can see that price to earnings ratio has moderated to a fairly attractive 8.7 times when compared to its own historical average price to earnings ratio levels. So at that price of $24.50, Ansa Merchant is trading at that price earnings ratio of 8.7 times, again well below that sector average of 29.6 times. Ansa Merchant has preserved its dividend and offers us dividend yield of around 5%, which is smack in line with that sector average of just around that 5% level. So with improved operating income in mind, however, keeping an eye on some high operating expenses and of course continued market uncertainties, particularly related to market volatility, which has been taking place at the broader international level. Bourse is maintaining a market week rating on AMCL for this particular point in time, with a watch outlook as well. But that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at info@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.